Imagine you are traveling from Nigeria to the United States tomorrow. You have Naira, but in America, they use dollars. So how do you exchange one currency for another? And more importantly, how do traders profit from that process? That is exactly what we are covering in today's video. Forex is the largest financial market in the world, with trillions of dollars exchanged every single day. Yet, most people have no idea what Forex actually is. If you've ever wanted to learn trading but felt overwhelmed with the complicated terms, consistent charts, and so-called gurus online, then you are in the right place. Because in this series, we are starting from absolute zero, no assumptions, no prior knowledge required, just simple explanations that actually make sense. My name is Emmy. I'm currently on my journey of becoming a consistent profitable trader, and on this channel I'll be documenting that journey while teaching what I'm learning along the way. This is episode 1 of Learning Forex from Scratch series, and today we are answering one simple question: what exactly is Forex? Forex simply stands for foreign exchange. Just as the name implies, it is the exchange of one currency for another. Let's go back to our travel example. Imagine you are traveling from Nigeria to the United States. The money you spend in Nigeria is the Naira, but when you arrive in America, businesses accept US dollars. So before you can spend money there, you need to exchange your Naira for dollars. That exchange is Forex. That is literally all Forex means: exchanging one currency for another. Now, this doesn't happen only when people travel. It happens every single day between banks, businesses, government, investors, and institutions all around the world. And because of how much money moves globally every day, Forex has grown into the largest financial market in existence. Now, you might be wondering, why do currencies even need to be exchanged in the first place? Well, every country has its own currency. Nigeria uses the Naira. The United States uses dollars. The United Kingdom uses pounds. Japan uses yen. When businesses from different countries want to trade with one another, they need a way to exchange their currency. For example, if a Nigerian company wants to buy products from China, the Chinese company may want payment in their own currency. That means one currency must be exchanged for another before the transaction can happen. The same thing happens with international travel. The same thing happens with investing. The same thing happens with global commerce. Forex exists because the world needs a way to move money between different economies. Now, here is where trading comes into the picture. Many participants in the financial market exchange currencies because they need to. Traders participate because they want to profit from changes in price. Let me show you what I mean. Take a look at this chart. This is GBP USD. The value of this pair is constantly changing. Sometimes it moves up, sometimes it moves down. If a trader believes the British pound is going to become stronger in relative to the US dollar, they can buy. If price rises, they profit. If a trader believes the British pound is going to become weaker in relative to the US dollars, they can sell. If price falls, they profit. In simple terms, traders are trying to predict where price is likely to move and position themselves accordingly. Of course, it's not that easy. If it was, everyone would be rich. That is why traders spend years learning how market behaves and developing strategies to help improve their odds. Now, before you rush off to open a trading account, there are few important things you need to understand first. You need to understand currency pairs, candlesticks, pips, market structure, risk management, liquidity, and eventually advanced concepts like smart money concept. The good news is that we are going to cover all of that step by step throughout this series. So don't worry if some of those terms sounds unfamiliar right now. Let's quickly recap. Forex stands for foreign exchange. It is simply the exchange of one currency for another, and it exists because countries, banks, businesses, and individuals need to exchange currencies every day. And traders participate in this market because they are trying to profit from the changes in price. Now that you understand what Forex is all about, the next logical question becomes, how do these pairs get paired together? And that is what we are covering in episode 2. If you found this lesson valuable, make sure you are following the series. We are building your knowledge from the ground up, and I will see you guys in the next class. Peace.